morning, everybody. Very nice to be back in Seoul for Demo Day. And on this discussion on the topic of investing in the future, blockchain and cryptocurrencies. And what better place to do it than Seoul? Very happy to be joined by a distinguished panel, starting with now my colleague, Joyce Kim, who's joined as the managing partner of SparkChain Capital. But of course, before this, she was very well known as the co-founder of Stellar. I believe Joyce has been accomplishing a few firsts of late. I think now with Stellar becoming a crypto unicorn, that would make Joyce the first woman and the first Korean to be the co-founder of a crypto unicorn, so congrats on that. And if we go further, I believe Joyce would actually be the first Korean to have invested in Bitcoin from the very early stages, so very happy to have this kind of history and pedigree on the panel. Beyond Joyce, we have Elliot, Managing Director at Argon Group, which is a boutique investment bank in the Valley. And beyond that, we have Brian Tubergen, who of course is the co-founder of Coinlist, a financial services company focused on digital assets. And this makes the panel. So today we'll be talking about the future of investing, but before that, I think we just need to maybe take a state of affairs of the industry, see what some of the issues are that are shaping up that are affecting things like our investment philosophy and investment approach, and why don't we just get right to it. Joyce, if you don't mind, we're going to start with you because as we sit here in Korea, and we did an event last night, which Joyce hosted, why don't we maybe just start with kind of a state of affairs, if you will, or a view on the ecosystem here in Korea with blockchain and crypto.
Sure. So, I've been involved in crypto for a number of years now, and this is my first trip back to Korea in about 2 years. And in the interim, I'm very proud to say that Korea has emerged as a global leader in the crypto space. And I think we're seeing a lot of firsts, not just my own, but Korea is now the largest market for a lot of crypto coins trading. And we now obviously have Stellar up there in the league. And now we have a number of blockchain companies, blockchain development companies, and actually we were just talking about this behind stage, and we were talking about why is Korea turning out so many good blockchain companies. So I think that what we've seen here is clearly there's a strong well of developer talent. We have great developers all over Korea. We have a very high level of education and financial awareness. And to be honest, I would say that one of the things that's contributing to mindshare, which leads to trading activity and then other types of product development interest, but the initial kind of entry point into Bitcoin for a lot of people here in Korea has been the trading of it. And I think one of the reasons we see that is right now, if you're my generation and below in Korea, it's really hard to find a good place to put investment money that'll generate good returns that's not real estate. Because as those of you who live here know, real estate in Korea is very, very expensive. So if you're past a certain generation, we're priced out of it in a lot of ways. So that started to get people into the trading aspect of it. And then from there, if you want to become an expert in crypto trading, you have to be able to distinguish between the protocols. You have to know, why is this protocol different from this protocol? What's on their development roadmap? What products are they trying to build? What partnerships are they working on? And then that leads you down this development hole of, wow, if these protocols can do all these things that we can't do today in the world, then clearly there's a huge amount of product potential, and then that has unleashed this wave of development activity here in Korea.
Very helpful indeed, and I want to get back to a couple of the things you just mentioned, Joyce, but first, gentlemen, even though you're not from here, Korea is no stranger to anybody anymore in the crypto space. Do you mind just offering any observations at all that you've had before coming here or during your visit that might contribute to the Korea ecosystem discussion?
Yeah, I mean, I'll kick off. I think one of the big things is that a lot of it is to reiterate what Joyce was saying. It's amazing how big the cryptocurrency, blockchain technology, especially from the company point of view, that's building up here in Korea. It's at a level that I would say was kind of unprecedented versus the U.S. in many ways. But I think because of the lack of perhaps marketing, so to speak, it hasn't really reached out elsewhere, and I think that is, that's an area of focus going forward. That would be fantastic if we could maybe potentially get outside investors to look at investing in companies here, and I think that will definitely contribute to the ecosystem and also help build up Korea and then a lot of Korean-based blockchain companies going forward.
Yeah, I'm in complete agreement with these two. I'd say from my perspective in the United States, it seems like there's a lack of compelling blockchain applications being developed today, at least ones that have been able to get a lot of traction. And coming here and hearing about these companies that have 6 figures, 7 figures worth of revenue, that's both surprising and extremely impressive to me. So I'm just excited to be here and to try to understand more about why is it the case that companies seem to be having so much success here? What are these market dynamics? What's special about the customers, the products, the teams here? Because I think something really interesting is happening here in Korea. And we in the United States, we both don't see it in the United States, and we're a little sort of ignorant about what's happening over here. So it'll be interesting to learn more about.
And I'd also say that both the Chinese example and the Korean example is a big wake-up call to Silicon Valley, because Silicon Valley does have this habit of looking only within a certain geographic radius of where we are. And the fact that clearly the blockchain economy is going to be one of the important players in the future, and seeing all these other nations take the first kind of step into really developing those industries, or be it intentionally or naturally, Silicon Valley has to take note of this.
So on that note, in regards to blockchain and crypto, does geography matter at this point? Because the Valley has always played a leading role. We're here in Korea. Joyce, I've heard you talk a lot about Africa, about China having significant and leading R&D capabilities internally. Where are we in terms of looking at blockchain globally?
Well, I mean, I can kick off. I mean, I believe personally that, at least from the perspective out in the Valley, it's slowly increasing, but I think there is still a bit of insularity. It's still focused on, know what you know, and they only really know US companies. Occasionally there might be an Asian company, there might be maybe a European company that is applying blockchain, but for the most part, it has been really just focused on the US perspective. Now, having said that, I think there's a lot of global type investment funds that are taking a more open view, and as a result, I think they're looking at companies that are primarily basically Asian based, and most of it's been Chinese based, simply because China has been in the spotlight for good or bad with regards to the cryptocurrency environment as well as the blockchain ecosystem.
And from a product development point, I mean, I've done work all over the world, and have done a number of projects in Africa and India, and lived in South America. I would say that obviously East Asia, Southeast Asia, clearly rapid technological uptake. So we're going to see lots of products coming out of those spaces. I mean, there's a reason why a developing country like Indonesia became a leader in mobile app development and a market for consumer games so quickly, because the field is wide open there, right? At the same time, when you look at the African example or the Latin American example, these are huge swaths of land, so I'm going to have to make broad generalizations. I actually am more bullish on seeing products come out across continental Africa. Nigeria has a very active community and development ecosystem, just in general, but then also around blockchain, as does South Africa and Kenya. The ability to move money cross-border in Africa is very, very hard. It's extremely difficult, some of the most difficult I've seen in the world. In Latin America, it's not a difficulty issue to send money, because, to be honest, something like Western Union has a very good overlay there. The challenge with Latin America, you see blockchain companies doing the best in countries with massive political instability like Venezuela, right? So those are kind of the global examples, but I think where we'll see things moving along, which is kind of where these gentlemen sit, and curious to see what Brian and Elliot have to say about how are these ICOs moving internationally, right? Do we see these companies coming from there reaching out to you guys in the Valley, or companies in the Valley wanting to do their ICOs in Korea, or vice versa?
Yeah, I mean, I think that's a very good question, and we are seeing that shift, because I think when Argon started, it was very focused on just US-based companies looking to do ICOs, just with US-type investors. But we're definitely seeing a lot of inbound inquiries coming in with international companies outside the US looking to do an ICO. And it's not like what people think about an initial public offering where it's based in a certain jurisdiction. In this sense, I mean, ICOs are quite global. It just depends on where the company is based. But that's not really relevant to the actual ICO process itself. So we are definitely seeing a lot more, and we as a bank are also looking at exploring advising companies that are not necessarily U.S. incorporated, but elsewhere. But the focus just goes back to what the product and the service is, and if that's important, and that is stable and great. I think that's what we've been working on and emphasizing.
Yeah, I think you see a lot of companies, international companies, who are interested in sort of following best practices for how to run an ICO, and because United States regulation is the most stringent, you will see a lot of them wanting to sort of abide by that regulation, and therefore they'll come to places like Coinlist or Argon Group in order to sort of run these ICOs in a way that's compliant and adhering to best practices. Sort of the international dynamic is very interesting, I think, for these ICOs from the perspective of regulatory issues. If the United States decides to heavily regulate ICOs, there's really nothing stopping these companies from just going overseas and running their ICOs overseas. And this is very different than the way sort of financial services have been regulated in the past. In the past, the U.S. had a lot of control over sort of what U.S. companies are allowed to do, but because of the decentralized nature of blockchains and the way these ICOs are being run, it's very easy for a company to go overseas and conduct their fundraise. And so as a result, I think you see the United States being a little bit more cautious about how they're going to sort of implement regulation, because they know that if they're too stringent on ICOs or on sort of blockchain technology in general, if their requirements are too onerous, these companies are going to go overseas, and the United States will be at a competitive disadvantage in terms of taking advantage of these ICOs, which are the future of fundraising, or blockchain technology, which is potentially the future of software, the future of the internet. So I think that's an interesting dynamic you have with regard to the international nature of this stuff.
Can I ask them a quick question? So, I mean, the regulatory environment for launching an ICO varies in difficulty from country to country, but from the entrepreneur's perspective, I'm sure if there's entrepreneurs in the room here that are interested in this, it doesn't matter where you start an ICO, because with an ICO, the money can come from anywhere, and you guys have very current information about these fund flows. What would you name as the top 1 or 2 geographies where most of the investment into ICOs is coming from?
For the companies that are raising on Coinlist, it's actually mostly from United States-based investors, at least the big ICOs. And the reason for that is because in order to raise, say, $200 million as an ICO, you really do have to run more of a traditional fundraise process, which means you're out sort of pitching traditional LPs, financial institutions, pension funds, whatever, trying to get them to invest in your ICO. And because sort of the big ICOs that have run on Coinlist so far are US-based companies, their connections are best in the US. So when they're pitching the big institutional capital that's going to invest millions of dollars in this very giant ICO, that just happens to come from US sort of investors. In the long run, I think that'll change as we sort of diversify the types of companies that are raising on Coinlist. But because Coinlist is only a few months old, that's what we've seen so far.
And I would say, I reiterate what Brian was saying as well, that, yeah, the U.S. has been the #1 area where investment money has come in. But having said that, we've seen a lot of money come in from Europe as well, especially from regions such as the UK and Switzerland. Hong Kong is also slowly increasing, but I think it's a far third behind. I think a lot of what's going on with Asia, there is a lot of money out in Asia that's wanting to invest in these ICOs, but the biggest problem is the legal and regulatory overhang and the uncertainty. So a lot of US companies, as well as the advisors like us, have taken a very conservative view where we feel that unless it's coming from a jurisdiction that is stable or has some regulatory stability, what we end up doing is not taking money from Asian investors, so it frustrates them. But there are legal ways of doing it via holding companies based elsewhere in the world where Asian money can then come into the ICOs that we've been at least advising on.
So, Elliot, on that note, can I also ask Joyce and Brian to make a similar comment? I don't want to get bogged down on regulation, but of course it's critical. We all have a view on where regulation is today. But do we get stuck in the details? Is regulation catching up sufficiently? Are we concerned that countries are banning ICOs? Are there going to be major shifts in direction towards security tokens versus usage tokens? How might this unfold, and what's your guys' general view on regulation?
So I'm a former attorney. I consider myself a recovering attorney, because it takes a while to not be attorney after a while. I do think we are getting caught up in a lot of I think people are over-designing their ICOs to try to not be a security, and I think that that's a very dangerous game to play. I think what I find, I realize I've been on the capital markets attorney side of things. I've been an entrepreneur, I've been an investor, I've made a protocol. Where things get really interesting with ICOs, from my opinion, is the fact that it takes the traditional fundraising methodology and democratizes it, right? So I don't think that we should behave as if consumer protection laws that aren't applying to us right now will never apply. There's a reason why those laws exist, to protect, certain clarity and transparency of information, and we should, as an industry, be aware of that and still abide by those principles. And then I think down the line, if we are good players in our industry and are able to put forward good examples to regulators, then we'll see regulation that will allow this to occur as kind of the next step of crowdfunding formations, right? It's not that it's entirely necessarily going to be purely blockchain based, but to me it's the natural evolution of crowdfunding.
I think Joyce is right on the money when she talks about how it being the natural evolution of crowdfunding. I do think you'll see regulatory bodies like the SEC come down harder on these ICOs, and I do think a lot of them are going to be deemed securities, which will be problematic for some of these companies that have not raised under the proper sort of regulatory and compliance frameworks. That said, even if you do run a fundraise in a way compliant with US securities law, the way that these sort of compliant ICOs are running still very, very different than the way sort of a traditional startup would fund itself. A traditional startup in Silicon Valley might raise money from 2 to 10 sort of very sort of wealthy investors or venture capitalists. Here, you're still seeing these companies raise money from thousands of accredited investors. So even if sort of the general public can't invest in ICOs, you've still massively broadened the base of investors who are able to invest in these ICOs. So you've greatly improved the liquidity to companies. When sort of the general solicitation laws were passed a few years ago in the United States, we sort of thought they were dead on arrival in a way, because the traditional startups just continued to raise money from VCs. But what ICOs have demonstrated are some things that I think startups didn't believe before, which is that if you do raise money from a much larger group of investors, accredited investors, you can raise money on better terms, at better prices, much faster and with much more ease than you can from traditional VCs. So even if these things are deemed securities and the group of investors that are allowed to invest in these things are more limited, you still have a pretty dramatic change in the way companies get funded, which I think once some of the kinks are worked out, will be a very sort of value additive thing for the world.
Yeah,
So let me just add, we're moving into liquidity, which is also an important topic. That matters from the institutional world that's looking to get involved in this business, this industry. And Elliot, we were speaking yesterday, I think you have some distinct views on that. I guess it matters whether we're talking about security or use case. And we say that with the context that in Korea, the exchanges here are bustling. So one would think liquidity's high. We all see these turnovers and market caps. But I think you made some points to the opposite yesterday.
Yeah, I mean, obviously, I'm coming from a U.S. point of view, and I guess the baseline fact that people have to understand that, obviously, there's securities in the sense of traditional securities exchanges like the NASDAQ, New York Stock Exchange, et cetera, that trade equity securities. Now, in order to do that in the U.S., any sort of exchange that is able to list and trade a security has to be registered. Now, we also have a lot of these crypto exchanges. And people say, well, they're trading tokens, right? But it's a question of what type of token is it? Is it a security token or is it a use token? Now, for the most part, the tokens that are being traded on these crypto exchanges in the U.S. are use tokens. So that's because they're use tokens, they don't need to be necessarily registered, nor does the exchange need to be registered. But if a token ends up being classified as a security, it not only does the security token itself have to be registered with the SEC, but the exchange also has to be registered as well. So as a result, a lot of these exchanges are not listing and trading security tokens because, the obvious follow-up question is, well, why don't you just go get registered with the SEC? But that in itself is a long-winded process, and it takes a lot of time and a lot of money. And so in their mind, there's enough utility use tokens out there to provide sufficient revenue for these exchanges, so there's no point in doing securities. So the knock-on effect is that a lot of these institutional investors, they're sitting on lots of money and capital on the sidelines, are unwilling to invest into some of these ICOs at the moment because their focus is really on security tokens versus use tokens. And why is that? Primarily because they have these institutional investors, they're only looking for profit. They don't really care too much about whatever ecosystem a use token is going to be used in. However, they are concerned, they are focused and they prefer security tokens because, it's just like any sort of standard equity stock. It's going to hopefully go up and they'll make some money, they sell, etc. But if there's no exchanges to offload any positions, if a token decides to drop down in price, they're holding onto a position that could be very significantly loss-making. So that's been, at least from my view, what I've seen in the US, why a lot of institutional investors haven't jumped in, or one of the areas or reasons why they haven't.
And also on the nature of liquidity, are standard business practices becoming sufficient and sustainable and such? Joyce, as we chase liquidity, will it be the industries that sets those best business practices or standard operating procedures, or will it be governments driving it? How will this play out towards improving liquidity?
So, in the Korean example right now, we're in a situation where the government is looking very heavily at how they should regulate it. And on the flip side, with the Korean exchanges taking such a global spotlight, people are really concerned about scams, right? And so it's a double-edged sword. I think that this technological evolution is inevitable. Like, we're going to keep moving in this direction. We're going to see more of these systems developed. But at the same time, because the markets are not quite fully liquid and not every coin is everywhere, you see that there's a big marketing competition between a lot of these ICOs. And one thing that is true is that in the crypto space, for as long as I've seen, there's significant liquidity-making activity that I, as a lawyer, would be very uncomfortable with if I saw any of my clients doing that. And I historically have always stayed away from that. I remember when I launched Stellar, a number of people reached out and said, hey, Joyce, we can do for you what we do for the other guys. And I'm like, what is that? And then they start explaining it to me. And I'm like, that sounds pretty damn illegal.
Joyce, as you're explaining this, is it fair to say, too, that a lot of new entrants into this industry would not have that perspective? Very difficult to know.
You mean my philosophical perspective?
No, in terms of some of the practices that you wouldn't support that are going on amidst the liquidity flows.
I think it's getting, is it getting less sketchy or more sketchy is what you're asking, right?
Yeah.
I think both sides are growing equally well right now. I don't think that harsh government regulation will fix the problem. These protocols, for better or for worse, they're unstoppable now. They're just going to keep going forward. And if that's the case, as a government, you have a choice. Make it illegal, make it hard to do, and then you push it deep underground. You push it into the dark web. And it's not easier to find there. Or you take an open policy, a learning policy, one that's smart and thoughtful about technological development, brings it into the sunlight, into the transparency, so that we can keep it, so that there's good players in the market that are also helping, rather than pushing it underground. That's my opinion. I don't know if you guys feel similar or different.
Yeah, I actually think it's going to be very challenging for governments if they really want to heavily regulate this stuff and push it underground, just because all of this stuff is so international and so global. The companies will just move overseas, move into a different country. So I think the right answer here is kind of a combination of things, like Joyce was saying. I think to the extent these ICOs are, or these companies are completely fraudulent, there needs to be more basic investor protection laws, and we do need to see regulatory bodies go after the obviously fraudulent companies. But then there's another dynamic which is a little troublesome right now, which is just, these companies raise huge sums of money with a white paper and very little product built, hundreds of millions of dollars. And from an investor perspective, that's probably just not a good thing. And so over the past, 50 years in the world of venture capital, venture capitalists have developed all kinds of protections and incentives built into the system so that they don't necessarily get screwed in these situations, or so that companies, for example, raise money in a series of rounds based on whether they've hit their milestones, whether they look like they're going to be successful. So sort of rethinking the way these sort of fundraisers are structured in this crypto world would probably be a good thing too. Because if you think about it, right, you can put $200 million into a single company, or you could potentially fund 20 companies with $10 million. And odds are probably one of those 20 companies will do better than that one company with $200 million where you had to kind of pick the right one from day one. It's better if you can kind of let a bunch of people take stabs at the problem and then double down on the winners. At least that's my take on it.
For purposes of time, why don't we get to investment philosophy? This is great background. It gives everyone a good sense of the issues out there. But let's talk investment philosophy. Let's start with Joyce. Let's reference maybe as a prompt Polychain Capital, who believes in investing in the protocol layer rather than the app layer. Elliot, I know you're going to have views on that too. I think there was a belief in the audience last night that there's going to be an explosion of app layer investment. But Joyce, why don't we start with you?
So you want to know where I would put my money?
Where are you as SparkChain Capital?
As SparkChain Capital, okay. As SparkChain Capital, and instead of my personal investment.
Well, then we'll get to that next.
So I would say that we're later stage, right? So Spark Labs Global, which is the original organization here, is more earlier stage. As SparkChain and as an early blockchain person, I think that it is more prudent for us right now to focus on the second level, like the next stage. And the reason is but some of you may not know that I stepped down from the tech world for a little bit to take a break for about a year or two, kind of retired. And then I came back. And the reason I came back is because we have the chance to build all these different things right now in the world. And there's actually so much attention going to just trading applications that we're overlooking the really core, beautiful technology that comes from the different applications and services that can be built on top of that. I believe that, yes, we're going to have several complementary protocols that will reach, that will address different important and big use cases. I don't think we need 2,000-3,000 different protocols. So my protocol investing, I think, should be more limited to the ones that have already been established. If you have a white paper and nothing else, not even a test net, that's a problem. On the service level or the application level, I would say that there's two ways you can go about building and investing. You can build for the far, far out future, because with Bitcoin, we know we can dream like years and years ahead and figure out some blockchain functionality that we can put on Mars. But I don't want to invest in the Mars use cases quite yet. I want to see what we can build that people will find useful in the next couple of years, because there are certain kind of bridge technologies that will help us get to that point.
Now, before we move on to the guys, did you want to make any other further comment as maybe a retail investor, how one should think about the industry?
I don't think I should make any comments about
Fine, moving on.
That's a safe approach. So I think from my perspective, it's a little different. I'm probably more focused on the app layer, and simply because I'm coming from the point of view of an institutional investor mind frame, and usually majority of these institutional investors don't have the technological expertise or the background to understand protocols, quite frankly, and a lot of them are just jumping on the bandwagon because they hear protocol X is doing well and Y is doing well, so they just figure, okay, I might as well put some money in it. But at least I think with the app layer, the beauty of it is quite everyday. There's obviously a potential daily application of it, so that allows individuals to understand it, be able to explain it to others, and I think that's, it's a classic case of you shouldn't invest in anything you don't understand, and I think hopefully people will take that approach going forward.
Yeah, from my perspective as potentially an investor in these things, I'd say there are three categories of things I'd be interested in. One, just the coins themselves. I think the money coins, the things that are looking to sort of replace money, whether that's Bitcoin or whether that's some of the privacy sort of focused coins like Monero, Zcash, or whether that's the stable coins, things that are coming out in the future like Basecoin. I think that's interesting from an investing perspective just because the market cap of money is so huge and the network effects are so strong that there's going to be one or two sort of coins that just end up taking huge market cap in the long run. There will only be one or two because the network effects are extremely strong, but if you can pick those one or two, or maybe it's five, you're going to make a lot of money.
But then the 5 fork into 10. And then,
potentially, but I mean, I think eventually the forks will struggle just because the network effects around sort of the original will be so strong. So that's interesting. I still think the protocols are interesting. I think if you look at where we are from a technological perspective, in order to build sort of the applications that people dream up, I think for some of the applications the world is ready, and I'll get into that. But for some of the applications, the tech just isn't in a place where you can really feasibly build these applications in a truly distributed nature. I think you still need more infrastructure there. So you will see more good, compelling protocol companies developed. Moreover, a lot of the sort of good, compelling protocol companies haven't actually sort of built that much yet. So it's possible, for example, you could see someone else come in and build a more compelling file storage protocol.
Let me do this. We're almost out of time. I do want to give the audience a chance to ask a couple of questions, but before I do, any other comments, Joyce, you'd like to make of the team of importance about where blockchain really wins, a holy grail moment, a major priority, something we're really shooting for here? Anything else worth mentioning?
I think that globally people need to stop paying so much attention to price and start taking the time to study up on the technologies, because, you know, from my perspective, when I first saw this and I thought, we can do these databases in a distributed manner so that people who don't agree can use the same. So that, for me, was like a very important technological moment, and it really has impacted my perspective on how I view the entire space and how I view product development. The price is, you know, honestly the thing that brings a lot of people in today in mass globally, but it really shouldn't stop there. That should just be the preface to anybody's learning story. And I would love to even see companies that focus on, you know, could you imagine an ed tech company that pulls people in via trading, but then turns out to be a financial literacy or financial trading kind of education site that like makes everybody into future Wall Street financial folks, like these gentlemen here?
And I actually, Grace, I'm sorry, Joyce, that's exactly what I was thinking as well. I think price, unfortunately, has been the massive driver. And as a result, you almost want to say, you hope this bubble pops, because what it's going to do,
I don't hope that, but go ahead.
Because in a way, well, I guess, yeah. In a way, it's going to flush out a lot of the scam artists, a lot of these speculators, and then there's going to be, hopefully, then a focus on
Clean up
great
the
product.
industry a
Yeah,
little.
that's exactly it.
Yeah, I think it's the nature of anything that involves network effects, and in particular technologies that involve network effects, that you know, there's always going to be bubbles, there's always going to be big highs and big lows. And I mean, I think the important thing is not to panic, because the fundamental technology is still going to be there and still going to be interesting. So yeah, there may be a bubble that pops, but in the long run, I still think that there's a lot of value there.
So this is great. I'm sorry it went so quickly. I could stay up here another half hour with you guys, but maybe we could just take a moment and ask if anybody in the audience would like to ask a question of the panel. Happy to lend you my microphone. Any questions at all? It's right there. I'm sorry. I see one here and one there. It's a quiet auditorium. Maybe we can hear you if you don't have a microphone.
I have a question to Joyce.
안녕하세요.
Yeah, 안녕하세요. I want to know how you started at Stellar.
Why we started it? Or-
How you started,
So I would, like, okay, so
and your future point of view of the cryptocurrencies, how it's going to be used in
the second one is,
가상화폐가 이제 일상생활에서 어떻게 이제 사용할 것 같은지.
okay.
Your future view.
Yeah. So I started in Stellar. Well, so I was actually a venture capitalist at the moment when we were thinking about starting Stellar. So me and Jed McCaleb, who is my co-founder in Stellar, will be on the next panel, we were talking a lot about what was missing in the blockchain space, and realized this was a long time ago, right, years ago, and what we could build that could make a difference in that space. And to be honest, you know, I was one of the few women in this space. I come from an immigrant family because I'm a Kyopo, I'm a Korean American. And I have done a lot of work in the developing world in general. So my perspective in blockchain was very different from a lot of the other early blockchain people who come from a very different political persuasion than me, which I respect all different political persuasions, but I just have a different worldview. So you'll see in the design of Stellar a lot of features and characteristics of the technology and the governance that make it a much more accessible technology, because I think that Bitcoin mining is really, really phenomenal. But when you look at developing an infrastructure that can process thousands of transactions per second and that can be used in any country regardless of energy availability, Bitcoin blockchain is not the answer for that. So that's one of the reasons why I actually kind of went back to the digital currency space and started building Stellar then with Jed. And we pulled together a team. We received investment from Stripe, which is a payments company in the United States. But when I say we received investment, we organized Stellar as a foundation, as a 단체. So it actually is not a money-making entity like some of the other protocols or ICOs out there. The future applications, I think we will see it's following the same vein as what our original philosophical intent was, where Stellar is doing a really great job in helping people build products in parts of the world, like the Philippines and India, where financial infrastructure doesn't flow as easily, so they even need just a base level protocol to help get started. And so I think that the true future of digital currency, blockchain plus digital currency, is actually in the developing world and not necessarily Silicon Valley or the very, very developed nations of Europe.
So with that, I think we're going to have to end. I'm sorry that we can't take other questions, but of course the panel will be here all day in the side rooms or in the audience or in the back room. So feel free to come up to any of the panelists and continue the discussion. And thank you very much to our panel members for being here in Seoul, Korea, and we look forward to you being back for the next one as well. So
Thanks for having us.
You're
you
not
for
off the
having
hook.
Thank you.
Thanks, everybody.